You know, it's always natural when the market makes a big move and then stalls a little bit for doubt to creep in, particularly this market that I already said is hated. So the big question is, where does the rally go from here? Do we continue to rally from here? Well, my next guest says LFG. That's right. Let's bring in Luke Financial Group President and CEO, Luke Lloyd.
Hey, Charles.
Luke, when I saw LFG, I was like, this is my man right now, but it's not the LFG I was thinking about.
I will say that's definitely one of the reasons why I had to go with that acronym, right?
Well, you've got reasons, though, right? I mean, these are just some of the reasons that you're pointing out to investors right now why you think there's another leg to this rally.
So it's very interesting. We all have been living this crazy train, and rest in peace to one of my rock legends, Ozzy Osbourne, who we just found out passed away. But I think the optimism with the seatbelt on is something very interesting, because I hate the term, and I'm very picky about the term cautiously optimistic, right? But the NASDAQ's been rocking and rolling for so long. The RSP has not really caught up too much. It's very interesting today. The RSP is up 1%. The NASDAQ's down. The S&P's flat. So what I think the seatbelt is actually the undervalued, more dividend-paying, smaller cap companies in the S&P 500 that have not caught up. So I think it's very possible we see the NASDAQ kind of stagnate, the big tech companies stagnate, and all the under-the-radar stocks actually catch up.
So in a way, that's good. I mean, that's rotation. Money's not leaving the market.
The S&P could actually not drop that much. The NASDAQ could decline a little bit, S&P be flat, the RSP actually increase. And I think that's what we're going to be seeing.
So you've got some under-the-radar AI plays. And when I saw on the list AT&T, I'm like, that is definitely under-the-radar AI. And you say this is for growth and exposure.
Yeah, it is. So AT&T specifically has been growing a lot faster than Verizon. I mean, with their subscriber growth, with their fiber build-out networks. But look, AT&T, Verizon, these kind of stocks are actually the highways of AI. So, you know, NVIDIA's the arms dealer, the memory, the brain, essentially, of AI. The highways need build out, and those just haven't caught up yet. So actually, the Verizon earnings report we saw yesterday, I think there's a lot of under the radar, again, investor confidence is going to be coming around the corner for these stocks.
And you make the distinction, right? You say Verizon, they both kind of serve the same function, but you say this is more about yield and valuation.
Catch-up trade. I mean, if AT&T is building out a little quicker, a little faster, subscriber growth, fiber build-out, Verizon's right behind there, not necessarily as fast as the growth, but the valuation needs to catch up. Again, part of the RSP index conversation, part of the equal weight, dividend-paying stocks. We haven't talked about yields. If yields drop, that's even a call option on these stocks.
Seagate Technology about to take off. Now, I've been playing Seagate for at least 30 years.
Yep.
So Seagate and Western Digital, they only, to me, have, you know, RDC.
I wasn't alive 30 years ago, Charles.
Well, let me tell you, it can be a wild ride. You talked about seatbelts earlier. When it's hot, it's hot. When it's not, it's not. But you've got a laundry list of reasons you think this is ready to do even better. But let me just add the caveat. I'm going to put the chart up for folks here. It's made a monster move here, so we kind of wanted to pull back a little bit.
I've owned it for a couple months now for my clients. I mean, obviously, we should have bought it even probably earlier than a couple months. We're rocking pretty well. But I'm not planning on selling that anytime soon, because Seagate is the memory. So again, NVIDIA is the brains behind it. You need the memory for the data centers to back it up. When it comes to buying it, if you have not owned this yet, I'm looking at the 50-day moving average. I mean, back in the day, I've been very technical here. The 50-day moving average is $128, so you're looking right around there. You had some consolidation about a month ago in that spot. That's where I'd be looking to pick it up. If you're just looking to start a new position, I'm not selling anytime soon for my clients.
All right, bottom line. My man, good stuff. LFG.
Yes,
it's hard to forget. That's all you need on your business card is LFG.
It is.
Call me.
You're doing my marketing for me, man.
All right, folks.